I'm back running a couple minutes behind schedule per usual. So sorry. But thanks for tuning in to my live. For those of you who are new here, this is the weekly live where I answer all of your mortgage questions, give you a mortgage update on what the market looks like, and just give you my personal thoughts on my week, favorite TV shows, all the things that people like me like to talk about. So welcome back and welcome if you're new here. I'd love to hear where you guys are tuning in from around the country, what stage you're at in the home buying process, and I'd love for you guys to get some questions filled up here in the chat. So for starters, guys, I just want to give you an update from last week. Friday was a pretty horrific day for mortgage bonds. We had seen 2 consecutive weeks in a row where the bond market opened up and we were like a loss of like 30 basis points. And so by the end of Friday, I mean, we had basically lost almost, it was like over 80 basis points, which, guys, is almost the equivalent of like 0.75% on a rate, which is significant. Now, obviously, I'm just telling you that to give you a reference point, but it was honestly the highest I'd seen rates go, and it was really for nothing that I could tell in terms of like economic news. And sometimes that happens because there's an early morning sell-off, and then, those things can sometimes snowball. And I think that's just what happened because honestly, I couldn't find any piece of real substantive economic data that would really make such a big move. Since then, we have seen corrections. Monday was kind of not great, but then yesterday and today, we've seen some improvement. You generally know that there's improvements in the mortgage-backed security market when the stock market closes low. So that is something that you maybe want to take a snapshot of or keep track of. So if you're shopping interest rates, other notable headlines, mortgage applications are dropping. I think this is to be expected, one, because we had unprecedented demand, with coronavirus and interest rates being into the 2s, and the acceleration of, the demand in real estate. So I'm not surprised that we're seeing a drop. This is probably going to become a headline of some kind. And so for those of you who are weary of the market, I just want to remind you that you make a financial decision based on your budget and if there is a real need, right? So if there is a real need for housing and the payment falls in line with your budget, then you should make the move. Real estate is a long-term investment. I bought my first home in 2006, which we now know is a historically bad time to have purchased. I bought it for $168,000. At one point, that condo was worth $33,000. Today, that condo is worth over $300,000. So if you know this about real estate, it typically doubles, every 20 years. And that's basically what I'm seeing in that property. Different areas and different timings. Sometimes you can shorten it to 10 years, but depends on when you buy. So anywhere between 10 to 20 years, the property typically doubles. And so I say that to you because there's lots of people that are fearful that right now is a bubble. And the other thing I want you to remind you of is that history does not repeat itself in the way that people anticipate. So our grandparents and our parents grew up believing that there was going to be another Great Depression because that's what the generations beforehand experienced, right? Our generation and, maybe the generation after us will be worried that another Great Recession, housing crisis is is about to happen, right? And that's just because it's what happened in our lifetime. And so we'll always be worried about that happening again. And so the next thing that will change the economic climate, that'll change the economy, that'll be the big bust, it's going to be something else. And so I just want you guys to know that housing crises, values that drop, those things are in relation to real demand and inventory. And we just don't have the properties, the listings on the market to really sway the value of homes. Even if demand drops off significantly, guys, it's going to be a slow burn. Like, we're still very low. We're looking for 16 to 20,000 listings, right? And we're anywhere between 5,000 and 6,000. So I hope that helps you, right? And puts a lot of things into perspective. The news is a really great place to find information, but it's also a really great place to scare the shit out of you. So, all right, guys, let's get to some questions. All right. So let's see here. Currently having some technical difficulties. There, I figured it out. Okay. So welcome, Jen. Welcome, Robert, Raphael, Andrew, Gonzalo, Rod and Laura, my faves, Devin, Alejandra, Nayeli, Theo B. Awesome. Thank you guys for tuning in. All right, so first question, and Raphael, I actually brought your question with me, but I'm glad you posted it in. It says, thinking about buying out MI, but it's only $62 off a monthly payment. Cost for the buyout is $4,338. Homes, $258,000, 5% down conventional, 4.3% interest rate. Should I invest this money instead? So here's what you want to look at, and you want to talk to your real estate agent and find out what the rate of appreciation is for this area, and look at the worst, and then look at the highest it's been, and then what the median has been, right? And so based on that calculation, if when you get to 25% equity, you can actually request that the mortgage insurance be taken off if you're getting a conventional loan. And so if the amount of cost far exceeds the break even, right, then you know that you should just wait it out, put the money in other things. $62 isn't a ton of money, but I don't know enough information to calculate your break even to tell you whether or not it's a good idea. So one thing that you'll need to know, here, hold on. I'm going to do a little bit of quick math here on my phone. 4, 3, 3, 8. You're looking at approximately 5 years and 8 months. So chances are, with just the way that things are going, you'll probably have the 25% met before then. Okay. All right. So let's see here. We have Gonzalo from St. Paul, Minnesota. I don't know why I had a hard time saying that. All right. So Rod and Laura are talking about inverted yield curves. Let me know if you want me to get real nerdy, because there is some tinfoil hat, and it's not really tinfoil hat, but it is speculation on what will happen when we see these. And we can talk about that as it relates to the real estate market. We can talk about how it relates to general economy. I don't want to scare you, but let me know in the comments below if you want me to touch on that topic. All right. So how do HELOCs, and it's Nayeli, right? So let me know if I said that correctly. How do HELOCs work, and how do you use a line of credit? Do you get a debit or credit card to use with that line of credit? So lines of credit are second loans that you take out on your primary residence or your investment property, I guess real estate. You can get a line of credit as a first mortgage, but generally speaking, they're most of the time second mortgages. And they are basically like a revolving line of credit against the collateral, so the value of your house. And so they work a lot like a checking account. You have a checkbook, and then I don't know, because I haven't had a line of credit in a long time, if you get a debit card, but I know you get a checkbook, and I know you can make transfers into your checking account. So those are things that I did know that you could do. And it works very similar to like an account that's just attached to yours. You will have to make interest payments on that. But they're simple interest, so you only pay interest on the balance that you owe at that time. And a lot of people like them for small things like, if you're borrowing anything, $50,000 and under. Whenever you get to six figures, in loan amounts, sometimes you might want to look at the difference between a cash out refinance, just because HELOCs are based on prime. They're always adjustable, and they can actually go up as high as 18% if you read the fine print. And so just because we're in an inclining rate environment, whenever you're borrowing six figures or more, that payment will be substantially impacted on it, regardless of whether or not it is interest only. Okay. Oh my God, guys, we have the king of YouTube on here. We have Javier Vidana tuning in. One of my favorite humans on the planet, an amazing real estate agent, has one of the best YouTube channels I've ever seen. The reason I even do YouTube is because of Javier. So say hello to him. And if you haven't seen him before, go like and comment and subscribe to his channel. All right, so we got Santiago from Fresno, we got Gabby D, Andrew from Pasadena, and Raul, who asked a question, says, hey, I'm looking into purchase new construction, and the builder's offering 6% concessions to cover costs, and said whatever is left over from the 6% can be used to purchase points. Yeah, so points are so every single interest rate either comes at no cost, a credit, or it comes at a cost. Did I say that right? Did that make sense? So it's like no cost, a credit, or a cost. There we go. And so essentially a discount point covers the costs for lower interest rates that are beneath the par rate, the rate that doesn't cost anything. And so they're generally great. The only obstacle there is that your closing costs will only be so much, and 6% sounds like a lot, so you probably will be using a significant amount of those in discount. You do want to get a fee sheet though, because I've seen a lot of lenders offer really large concessions, but also charge a significant amount of money. And then they increase your interest rate to be able to cover all of those expenses. So just be aware, ask for a fee sheet, get a quote from a non-builder lender, and make sure that what they're offering you is truly competitive. All right. So Rod and Laura says, wouldn't mind getting your take on the 2-year, 10-year, 5-year, 30-year treasury yields. Okay. Okay, so they do that. How much points can they go? I mean, honestly, it just depends on the cost of rates at that moment in time. On Monday, I locked somebody in at a 3.99 rate, and it cost 2.5 points on Monday, right? And so, you can do things like that all the time, but, maybe that rate today with the market improving is maybe 2 points. So, it depends on the day. And it also depends on the scenario about how much a rate will cost you. But it is not, right, I bought 2 points down and now I'm going from a 5% to a 3%, which is an often, misunderstood concept. All right. Is it Tokoyisa? Did I get that right? Okay. When purchasing new construction, do you have to put down 20% or can you use an FHA loan? I think what you're referencing is a new build, so a home that will be constructed by a builder. In that scenario, you can use any type of financing that they're willing to accept. If you're talking about a construction loan, though, there are renovation loans, so you can do some renovations on loans with FHA loans, but from the ground up type of home is a construction loan. They typically require 20%. Gonzalo says, so I bought my house on a conventional mortgage with a down payment assistance. How long do I have to live in it before being able to buy a second home? It just depends on the terms of the down payment assistance. I know here in Arizona, there has been a stipulation for the last couple of years that you have to live in the home for 3 years as a primary residence. Otherwise, you just have to repay the down payment assistance back. A lot of people have decided to repay the down payment assistance back because the interest rates were so favorable or because they ended up finding a property that they liked better. It just happens. So you just have to read the fine print and the deed of trust, right? And also maybe call your lender because they will definitely have the details on that. Just so you guys know, because I do get that question a lot without down payment assistance. So in most cases, you are signing a deed of trust that says that you will agree to occupy the property for a minimum of a year. And most lenders want you to occupy within 60 days of your close of escrow. Okay. Okay, Theo B, ask your question. Oh, one more question above. Oh, did I miss your question? Guys, if I missed your question, because honestly, this is intimidating, believe it or not, it's harder than it looks. Can you just repost your question? Because the last thing I want to do is not answer them. Okay, so Lizy, can you apply for multiple HELOCs at the same time if you have multiple properties with significant equity? What do you recommend to someone who's trying to access cash without doing a cash out refinance? Yes, you can absolutely apply for multiple loans at the same time. I would recommend applying for them with the same bank just to streamline your process. But so long as your debt to income ratio allows for it and you have a good banking relationship with the bank that you're doing it with, it should be fairly simple. Let's see. And obviously you have to qualify loan to value wise too. All right. Sheila says, would we have issues getting qualified if one of us doesn't have a 2-year work history, both W-2'd, but my partner has only started full-time work earlier this year. This is also a question I get often asked. So the requirement is a 2-year complete work history, and we at least have to have 6 months consecutive. And so sometimes we'll see that a borrower maybe took an extended period of time off because they became an independent contractor, or they had a medical leave of some kind. Maybe they just had a baby, right? There's a reason that there is a gap of greater than 6 months. So long as that person has returned for a minimum of 6 months in the same line of work that they previously worked in, they should typically qualify, so long as the past, right, we can complete a 2-year, with no gaps, employment history, okay? So if your partner just started on their job, do they have a minimum of 6 months? And in their entire work history, could you satisfy a 2-year work history? If yes, then, I'm only answering this for this one specific guideline, then yes, it sounds like they should be able to qualify and use their income. All right. So Devin says, long term, since so many people bought and refied at super low rates, thought on if people will stay in their houses longer than historical norm. So people don't live in their houses 7 years anymore. It's actually 13 years. And the thing is that people move for a variety of different reasons. I think that because... Oh my God. So now I'm going to talk about the inverted yield curve, because this is like where my tinfoil hat comes on. So I think that there's a lot of reasons why people actually make moves. One, their family size grows. They want a nicer area. They want more improved, features of the home, right? And so there's a lot of reasons why people move in general. But one of the other reasons is for economic reasons. And whenever you see an inverted yield curve, and an inverted yield curve means that the 2-year returns on shorter term bonds are equal to or close to longer term bonds. And generally speaking, when we see that happen, a recession follows like 18 to 24 months after that. And a recession, guys, is just a slowing down of the economy for 2 consecutive quarters. And it is literally the thing that we want, because inflation is just so bananas at the moment, okay? And they're doing everything that they can to stabilize it. But, it's looking that is likely, okay? Now, when recessions happen, people get fearful of just the general state of the economy, and things like investment properties, they relinquish. Maybe people get sick of, Airbnbs, and I do think that there's going to be some legislation on those too. And they just generally, like any excess properties that they have, people sell, or people like to downsize. And in recessions, typically interest rates go down too. So, I don't think that it's going to extend longer than 13 years in terms of, when people will stay in their homes. I actually think that we will see more volume of houses come on the market once the economy does shift. All right. Then Slama says, we bought a house and found out we bought a house and found out we could have to move in the next year, but we'll definitely be moving in 2 years. What should we be concerned about in terms of taxes and fees, and also resale value? So one thing that you will want to check in is capital gains. But the thing is that, like, if the house is a good long-term investment and it makes sense to become a rental property, and if it's a long-term rental property, eventually you would already pay those capital gains. So capital gains are typically minimized or like reduced or not paid when you've occupied a property for the last 2 years and either sold it within 5 years. But if you own a property for longer than that and have it rented, you're subject to the same capital gains. And so you will want to talk to a tax accountant about those things. As far as like fees and resale, you do want to account for, additional commission expenses and the fact that you will pay like title fees and transfer fees and payoff fees. But with the way that things are going in real estate and the fact that you could get a 20% return on your money, it might be worth it to do that. In general, if you were looking to sell, you again will want to talk to a real estate agent, run through, some estimated net sheets, right? Which is just like, they do like what all the costs would be and then tell you what your return would be. And then you'll want to talk to your accountant about how much taxes you would pay based on your income bracket. All right. So Andrew's saying, what is my prediction for interest rates by the end of 2022? I will tell you that I think it's really difficult to predict that at the moment. This is an economy unlike I've ever experienced in my life. And I mean, I think it's just going to be really hard to tell. Like, if you had, like, I think if you did ask me 6 months ago, I would have said that this was too aggressive of an increase in such a short period of time. And that I felt that based on history, that the Fed was going to take a long time to correct itself. And, that couldn't possibly be further from the truth. I mean, at some points it feels like the Fed has almost abandoned the mortgage industry, but they have to do something really radical to control the amount of growth. Otherwise, people won't be able to afford homes. So I think that at least for the next, here's what we generally have seen in the past, okay? So it is normal, right, to see a little bit of dip after Christmas due to holiday sales. I know that didn't happen this year, but generally we see that. And then we see interest rates increase, February and March, and they start to go down towards the end of April. And then we see another peak in the summertime, and we see them start going down in the fall and winter, right? So that is generally what we historically see. You see interest rates move up and down depending on how the stock market does, quarterly reports. There's, tomorrow is the PCE report, which talks about inflation. That'll definitely move the market tomorrow. So, but it's never been as volatile as it is right now. This is just I'm surprised I don't have an ulcer and I do have most of my hair now. I did get this really weird, itchy spot on my forehead though. So that will tell you about my weird quirks. It's just really stressful. So I would not be surprised if interest rates were in the fives. I'm hoping that they stay in the mid fours. Back in 2018, when we saw interest rates rising, they were in the high fours, 4.75 to 5.25, on some things. And so that's my hope. But I think that you just got to watch it all the time and make sure it makes sense for your budget. All right. So Raphael is asking if educational history will count for your 2-year work history, and only if it's a graduate school or vocational school. So if you went to school to be a nurse specifically, that would count if you became a nurse. If you were going to school to be an engineer and became an engineer, that would count. If it's high school, right, or a high school equivalent, it does not count. So there's that. Okay, let's see. Ronald Gomez says, can I lock in interest rates at approval? I've spoken to 2 lenders and they only lock at contract. During pre-approval, I don't know of any lenders that lock at pre-approval because it takes a long time for most buyers, especially in this climate, to find a house. From when we get a lead to when a loan will close, it takes up to 239 days for some clients. We have lots of clients that find homes less time, and we have lots of clients that find homes, believe it or not, in longer periods of time. So you just want to keep that in mind. But yes, most people will want you to be in contract. All right. So Paul says, I closed on my first home yesterday, 3.875 interest. I am so pumped for you. Congratulations. That is super exciting. Great job and congratulations. Raul says, in the purchase agreement, I discovered a lot premium fee of $4,000 to be paid at closing. The lot is a corner lot. What would this be the reason? It could be the reason. Generally speaking, when they showed the models to you, there are features that you guys selected, or that was the lot that was available at the time. And, any lots with better views or more access to things like, a green belt or park, generally speaking, will have lot premiums attached to them. But this is a really great question to ask your real estate agent that's representing you or the new home builder agent. Okay. Bree says, I'm making a low down payment. Is making a low down payment for a home realistic in this market? Yeah. Lots of people are still doing 3 to 3.5% down. You have to be really aggressive in your offers and have to be willing to explain why, or or defend why your offer might be as strong as another offer that's putting down a larger down payment. And so oftentimes I'm telling people that if they're doing like an FHA loan, they should be doing proof of funds. Their lender should be advocating for them, and that they should do everything possible to show the seller that they are a super solid buyer, like getting into underwriting before they are in a contract. That is something that you guys can ask your lenders to do. And so this is an important stuff. So I do think that it's possible to get a home, for 3% down, but I will say that some agents discourage that and tell you that it's very challenging. All right. So I'm going to read some of the emailed questions in while you guys get some more questions in there. And guys, if I'm providing you any value, don't forget to like the live stream. All right. So Carmen says, good afternoon. What is your state location? Can I finance in Florida? We are looking to relocate to that state. For the longest time, we've been looking for a professional like you. First of all, Carmen, thank you so much, and I so appreciate that. My team is licensed in a couple of states. I don't believe Florida is one of them, but I do and can connect you with some of the most amazing people. If you guys are tuning in from other states and want a referral for that, I am actually going to create a link that will be available in all of our videos. I've been currently working on it because it is a request that I get often. But if you email my team at teamhoeffer@myccmortgage.com, we will connect you with our best, realtor referral and our best loan officer referral for you guys. So Carl says, happy belated birthday. Thank you. I am coming out of forbearance. What can you say to help me? So here's the thing. Thank you for the birthday wishes, first and foremost. When you are coming out of forbearance, I would need more details. Are you looking to sell? Are you looking to refinance? What are you looking to do? Generally speaking, if you cannot make the payments at your current rate, you're going to want to speak to the loss mitigation department at your current servicer. So whoever you make your payments to, and you're going to want to try to negotiate a loan modification. If you cannot make the payments or the modified payments don't work for you, you might also need to sell that property, and you probably have a large amount of equity to look into. But what you'll want to consider if, let's say, you're good to go and you can make your payments, is just to be on time. And, after, depending on the type of loan, anywhere between like 3 months to 12 months, right? You can generally do all types of financing. So like cash out refinancing. You can typically buy a home after 3 consecutive months payments. So that, I hope that helps you. If not, definitely email me a more specific question, because I'm just kind of guessing. Alrighty here. So Andrea says, if everything is so broke and money is so tight, and then literally in all caps, who is buying these houses? So there's a lot of things that are misconstrued, especially with the media. But with inflation, guys, people's incomes have also risen. Depending on the industry that you're in, it's like anywhere between 6 and 10%, which is pretty significant. And so people are still able to afford homes. In fact, they're in a better financial position than actually during the boom of the time that has been freaking us all out. So the, early 2000s. So in general relation, people are in a better financial position. The other thing is that people have more cash than they've had, and there are a lot of corporations that are buying homes. So people are retaining their properties. People actually do have larger down payments. People have minimal debt, and they're making more money. So lots of people are still able to buy homes, guys. And so contrary to what the media is saying, there's still more qualified buyers than there are not. And that's who's buying houses. All right, so let's see here. My mortgage broker's family actually owned a distillery, and I got a bottle of their vodka as a closing gift. Oh, super cool. I'm not related to any distilleries or any vineyards, but I would take gifts from anyone who wants to send wine my way. That's awesome. All right. So, thank you, Ness. I appreciate you, and happy 21st birthday. Oh, I wish, guys, I wish. But I actually, okay, so this is like a sidebar, but I said I was going to do that. So I was listening because Tony Robbins just wrote this new book on health. And so he's doing all this podcasting tour talking about his book. And one of the things that he talked about was how people feel about aging and how people who are worried about aging look older and have more like tendency to get gray hairs, have more tendencies to get wrinkles, and that people who feel younger actually have younger bodies. And so I was like, oh my God, I do just have to feel younger and not be freaking out about this. So if that helps any of you guys, you're welcome. All right. So Devin says, believe your team helps with rescores if you pay off medical debt, reading credit bureaus, and changing medical collections as of July 1st. What's Lizzie's take on the change? You know what? I haven't read anything about that, Devin. I'm going to have to look into that, truthfully. Medical collections, as they stand right now, typically have the lowest impact on a mortgage qualification. Generally, we see mortgage collections. We don't really do anything about them. They still count as a collection and can really impact your score. So I am going to look into what you're talking about because it would be super nice if they weren't on anyone's credit report. All right. So Ami says, any interest rate going to be changed? Oh, for second homes? No. So part of the issue that with the housing inventory right now is that so many investors or people that want to get into the Airbnb game are buying second homes. And to discourage that, they've raised the interest rates on those. Not to mention, they really do want to cap the number of people who aren't occupying, because that was one of the things that led to the massive wave of foreclosures where people were dumping their second homes and their investment properties left and right. And so the government is really going to keep a tight grasp on that because they want to prevent that from happening in the future should there be a shift in home values. So Patricia Gomez says, I'm in the appraisal phase of the home purchase. Yay, girl. I'm so excited for you. That is awesome. Congratulations. Okay, I'm going to get to some more emailed questions, guys. So Gao says, Lizzie, I locked in at 3.75, waiting to close next month. Glad the 6-month wait rejections are over. I'm only putting 10% down and will have mortgage insurance. My question in this case, the rate of appreciation continues. One will soon have 20% equity. When don't I have to pay mortgage insurance? Who decides, and how is this decided in order to remove this? So this is a really awesome question, guys. And if he is qualified for a conventional loan, which I imagine that he is because of the amount that he's putting down, when you have paid the mortgage for 2 years and have 25% or more in equity, right, you can request that the mortgage insurance come off, but you have to apply with your mortgage servicer. They will send an appraiser out to your property and appraise it, and then typically will, approve or disapprove that, the mortgage insurance removal. So that is how it's done. Other people refinance out of loans like this. If it happens to be an FHA loan, it will stay on for the life of the loan. But that's a really awesome question. And guys, especially because rates are going up so much, 3.75 is an awesome rate that you don't want to have to rate and term refinance or cash out refinance and lose, right? So knowing this information will save you so much money on a refi. All right. Ryan says, I've been seeing many homes come out of pending and back on the market in the last 2 weeks or so. Wonder if the interest rate increases have anything to do with this. By June, we will see some slight but noticeable changes in the market. I've actually anecdotally also seen this. It feels that there are a lot more cancellations. And I think that people are getting really desperate bidding on homes without seeing them, and then taking their inspection period as a time to maybe get out of the contract. A lot of people are waiving inspections though right now too. So it is kind of interesting to see that the number of cancellations, at least for me, has felt high. I don't know if it has anything to do with any of the rising interest rates. I imagine that has something to do with it. I don't think that there's enough data to even know if that is something, if cancellations are increasing. But it is something I am going to keep tabs on because I have noticed it myself. All right. So Ness says, how does a lender check proof of funds or just copies of bank statements? Yeah. So a lender wants to see at minimum 60 days of your personal checking and savings account statements and the most recent quarterly statements on your investments or your retirement accounts. So that's how we check proof of funds. Depending on, the seller, if you're, and then the type of asset that you're using, I think a transaction history might work for a seller to view proof of funds. They just want to know that you're the owner of record and how much money you have. Patricia says, who pays who in transactions? Well, typically agents' commissions are negotiated and paid for on the seller transaction, but it's also comes out of what you are willing to pay for the home, because those are percentages based on that. Closing costs for mortgage and for title are paid for by the buyer typically in this type of market. There are other markets where the seller pays for those, but in this one, the buyer's responsible for them. Occasionally you can get lender credits for, some of those costs, or agent credits, but just realize that lender credits typically come with an increase in interest rate. All right. So Raul says, how many days must I occupy a second home for the lender not to consider it an investment home? So for a lender not to consider it an investment home, you can't have a long-term lease on the property, and the IRS requires you to be there at least 2 weeks out of the year. And that's what the requirement is for us. But if you are going to say it's a second home and then rent it out immediately, that should really have been financed as an investment property. And technically you are committing mortgage fraud. Okay? Not to be a buzzkill, but that is the truth. All right. So let's see. Like the real estate agent and the financial person. So the mortgage company is paid for by the buyer, and the real estate agent is typically paid for and agreed to on the terms of the listing, and it's covered by the seller. So, but sometimes the buyer pays that too. It just depends on how the deal is negotiated. Okay. Hey, Aaron. Good to see you back. I haven't seen you on for a while. Hope all is well. I missed the family over. Listen carefully, because Lizy helped me get from zero home ownership in just a year. Thank you. She's amazing. Oh my God, I love you. Thank you. I'm so happy to hear that. And how do you like owning a home? I hope that it's been amazing for you. Okay, Miss Shadow Llama says, why do you have to wait 2 years to drop MI? We have the appreciation, but we've been in the home for less than 2 years, because that's the requirement of the mortgage insurance companies. And so, hypothetically, you could do a refinance before then, but I always look at strategies to help you save money in the long run. And cash out refinances or rate and term refinances, they cost several $1,000s. And if you did the math on what 24 months is and paying the mortgage insurance, chances are you actually are better off just paying the monthly mortgage insurance. Okay, so M Jesus Lover says, hey Lizy, why would a lender ask for your pension, not your 401k statements, if you're not using any portion of it for your down payment? I don't know, because I'm not the lender, but typically we ask for additional reserve payments. And a pension you don't normally borrow against, or you can't withdraw from. So I think that's a little bit odd, but maybe in your case you can. But the reason that I would request for them typically is because I need reserve payments, so extra payments in the bank that you could withdraw if you fell on hard times and needed to make the mortgage payment. It strengthens your credit profile, and it helps underwriting go a lot smoother. And sometimes when we're having challenges getting something to be approved in the automated system, adding additional months of reserve payments, or it just helps the file score. So it's generally seen as a good thing in your home loan, even though it might feel like an inconvenience to you. All right. We got 15 minutes, guys, so definitely get your questions in. I've got a couple more emailed in here, and then I'd love to make sure that I get all of your questions answered. P.S. Any of the people watching this seen the new Bridgerton? Okay, so that's like my new binge TV show. Saying it's really good. Also, I started watching The Dropout on Hulu. Also really good. And since I'm raising money right now for Smart Sense, I've been having the weirdest dreams about Elizabeth Holmes. Yeah. Anyway, let me know if you've seen either one of those. Okay. So Eric says, what do you recommend for someone who bought 3 multifamily residential properties in the past 2 years, sit and collect cash flow, sell, or have cash ready to buy more rentals when the prices drop? I really don't want to sell and give up the government tax money. Doing a 1031 exchange would make sense if I was buying a multifamily commercial. I think you should double check with your 1031 exchange. At least how I understood, it just has to be the same type of investment. So if it's real estate and it's an investment property, I believe you should be able to use a 1031 exchange to purchase. I, as an investor personally, was very interested in getting a multifamily property, and my husband and I researched it for like 2 years, and we missed our window because we didn't buy when home prices, like we should have bought before 2020, and we just did not pull the trigger on it. And the things that you really have to pay attention to is multifamily properties like have a lot of maintenance to them, more than people think. And if you are not going to occupy them, you really want to get the pro forma on them and the rent roll and really calculate what it will cost you. A lot of them are or at least where we were looking, were older properties and needed quite a bit of deferred maintenance. And they didn't cash flow the way that I thought that they would. And so I'm not surprised that you're looking into like what else you could do with the money. But I would definitely talk to a tax accountant on what it looks like for you. And the thing is that, like, doing 1031 exchanges or any way that you can defer taxes is super smart. But also sometimes we have to take strategic losses. Like, I know a lot of you guys have heard me talk about the condo that my husband made me sell. But we also took that loss in a time where we actually had like a pretty big bonus due to some mineral rights to offset the taxes. And so sometimes those things can make sense, right, if you're balancing them out with something else. So it sounds like you're pretty financially savvy, right? But definitely talk to your tax accountant regarding the 1031 exchange. Okay, and last question that was emailed into me is from Moz. Says, me and my wife signed a contract to build our dream home in December 2021 when the rate was 3%. Our home is scheduled to be completed in October and the rates are 5% now. We put 25% down and the rate might stop us from getting the loan. Would we get our money back? We have not accumulated any additional debt. So this is when I would start talking to your lender about strategies for what happens if interest rates were going to be like 5.5%. And is there a way to buy down the interest rate to still be able to qualify? I have people right now that we're just like pulling all of our new build contracts and we're looking at ways to strategize a plan B. And you have enough time, right, to be able to do that now. The other thing that you can do is you can talk to your new home sales agent and ask them what the clauses are and have them review it with you. You can go over it with your real estate agent. Oftentimes, if you are denied by their lender, I've seen a lot of builders return the money. Now, that is not a guarantee. I haven't read your contract and I don't know like all there is to know about it. But in my experience, I have seen them do that. But you have plenty of time now to figure out other strategies to qualify. So I would get with your lender and review them. And if not, I would also talk to your real estate agent about what it would look like to maybe close with a hard money loan if possible, and then turn around and sell it, because at a worst case scenario, at least you would gain some money on the appreciation that you would have experienced from, December to October. All right. So let's see. What's up with all of Nico's messages? Were they inappropriate? Why are they all retracted? Okay. So normally I see that when someone's like trolling me. Okay. So Luis says, is it true that Fannie Mae are changing their guidelines with buying a multifamily home with conventional and the 5% down payment is coming back? I have not heard anything about that. Again, something I will gladly investigate. And then let's see here. Ricky says, what are the tax implications for a gifter and the gift recipient? So for the home loan guys, and this is often like asked and argued, we do not send a 1099 for the gift funds. So there are like the only tax implications are the ones that are set by the IRS. So they have, a self-reporting policy on gift funds that are gifted. And there's limits to that. So long as you are following what is allowed by the IRS, there will be no taxes associated with it. All right. So Milani Studio says, hello from Boston. Just wanted to say, hubby and I locked in our interest rate at 2.6 at the beginning of January 2021. I'm sure you did. And congratulations. That was also a really tricky time to lock in interest rates because in February of last year, we saw a dramatic increase in interest rates similar to what we saw this year. And so I'm super pumped for you that you got such a low interest rate. Congratulations. So Miss Taylor says, do you pay closing costs on a rate and term refinance? So you do pay closing costs on any type of home loan, except on refinances, you can actually include the costs into the loan. And on a purchase, you have to pay them upfront. So Nico says, I've been hearing rates may drop in a couple of months because of the inverted yield curve. Should I hold off on buying a home for a couple of months? I'm not in a rush to move. So what people are talking about is whether or not we're going to be in a recession. And typically during recessions, interest rates drop. But again, we're talking about 18 to 24 months and a lot can happen. Like, it's like why I'm not going, oh guys, this is what I think. I'm saying this is what I've seen and don't shoot me if I'm wrong. But yes, so I don't know if, a couple months is, I don't know. I think that there is some chance that we'll see a dip here in the near future, but I think that a lot of the odds are pointing to higher interest rates throughout the rest of the year. And inflation's the thing we got to watch. Obviously geopolitical things matter, but just so you guys know, this is another nerdy fact, but the economy is only impacted with a military conflict for 3 months. It's kind of nuts. We just kind of get used to it, unfortunately. And it's we understand the implications, what's happening. And then everyone just kind of accommodates moving forward. And it's not as big or as long of a financial and economic event as it feels or you would think. So, all right. So let's see here. Paul Ernest says, when will I be notified if my loan is sold or going to be sold? Where can I find this out? So generally speaking, your first payment is going to be made to whoever funded your loan. This is typical. However, within the first 30 days, you will either receive an onboarding letter or a goodbye letter, and they will tell you where to make your payments. Those of you who are worried about missing information, just so you know, you can always call the person who did your loan and they should be able to direct you to the right place. But I think the FTC made it so that way, there are no late payments that can be reported within 60 days of a loan transfer because, of this type of miscommunication happening. So don't be alarmed. Selling loans happens all the time, and there's really no way to know if your loan will be sold. Most lenders in this market are retaining most of their portfolio. So I would say the majority of them stick with the lender that you're financing, but there are lots of brokers and lots of, mortgage banks that are still selling. So within 30 days, generally, if you're closing. All right. So Jen says, dropout is so crazy. Sunny's trial is starting now. I know I'm going to keep tabs on it. Not sure if they're going to find a jury that doesn't know about this case. I know. God, yes, I know. So Devin says, are people really concerned with the cost of a home versus monthly payment? Generally speaking, I think people are concerned with overpaying. That is definitely something I hear all the time, but definitely not as much as you would think. I have lots of clients who are happily paying well over, appraised value for a home. I think people are definitely concerned with their monthly budgets, but in my experience, or at least the clients that I'm dealing with, most of the time people can qualify for more than what they actually, end up purchasing. So I am seeing still quite a bit of bandwidth with clients in general, anecdotally. But generally, I would say, a lot of clients come in with fears about the market, are limited on cash funds to be competitive, and will generally make decisions on their monthly payment. So I don't know if that helped you at all. Okay. So the title company has cashed my $500 to place the property on hold. So this is called earnest money. The lot is still a dirt lot, and it will be billed in 6 to 7 months for a move-in. When can I back out without consequences? Yikes. That depends on your purchase contract. You'll have to talk to the new home sales agent and or the agent that represented you. But generally speaking, when you enter into those new build contracts, the money is, I think, hard, but it's only $500. So you'll be fine. Nico says, I redacted them because I kept picking typos. Sorry, I called you out. Honestly, I get like the weirdest people who like troll me on these things, so I never know. And Zeke is always so nice. He just like redacts their comments. Okay. I got nervous when you said 15 minutes left. Sorry. Okay. So Miss Taylor said, I saw the movie Theranos. Though the dropout is giving a lot of her background not included in the movie. Yeah, I know. I honestly was surprised she was as smart as she was. And also, okay, so this is like weird, but I definitely have a sales voice and then I have like a normal voice, and my sales voice is very high pitched. And I was like, oh my God, do I do the Elizabeth Holmes thing? Except her thing was like, I'm a baritone. And I don't think I could pull that off all the time, but I don't know. I don't even know why it's all like in my brain right now. It's probably because I'm really focused on this app that I've been building for you guys. And I finally feel like we're on the final stages of finally being able to put that out. And I think that that's why I'm like having Elizabeth Holmes nightmares. I don't know. Alrighty, so let's see. So Maria asks, when looking over a loan estimate, should I bring to the loan officer's attention discrepancies? I notice with the amount of outstanding debt that's listed in the loan estimate. Yeah, I think that whenever you guys have questions, you should absolutely ask them. The last thing you want to do is get into a 30-year commitment and not be 100% certain that you have gotten the terms that you guys initially discussed. Now, I will say that on your credit report, it's a snapshot in time. And so a lot of times we'll get phone calls and say, hey, the balances are different than what they are today. And honestly, if you qualified with whatever the balances are at the time, you're good to go. And I wouldn't be overly concerned about them, unless you are paying off a debt at closing, and then you will want to provide them with an updated payoff statement. All right, so let's see here. Rod is saying food shortage, high fuel prices, and inflation are our three main issues here. Agree with you that a 3-month military geopolitical. Yeah, no, I know. We have so many issues, you guys. And that's why I think that the government is going to have to do something pretty substantial to slow things down. And I think that the end result of that is a recession in the future. So, are there any DPA programs specific to first responders, RNs? We don't qualify for USDA loans in California. You know, I'm not an expert in down payment assistance loans in California. I will say that in Arizona, we do give additional assistance to first responders and to veterans, and I believe teachers. There have been significant changes to those programs here in Arizona, and I think as of today, they were only available for people who made 80% of the area median income, which is under $63,000. And there was very limited funds available. So I don't know in your area specifically, but I do know that if you talk to a loan officer, and if you need one, I can recommend one. Again, guys, email the team, teamhoeffer@myccmortgage.com. And I will get somebody who knows everything there is to know about DPA, and they will answer that question. Okay, so Omar says, looking into a new build, should I go with the builder's preferred lender? I know they offer incentives, but I hear that they usually charge you more in the back end. Yeah, I think one, I'm pretty sure you have to get a quote from them. So get a quote from them and also get a quote from, your agent's most preferred lender. I mean, guys, like I have a client literally today that called and they're super upset. They can't get an answer back. They need to close their loan in 20 days and they haven't been able to lock in and they haven't been able to communicate with the builder's lender. We got their loan estimate yesterday. We can more than match it. And we sent them a variety of different loan structures. We even had a scenario that was equal to theirs, matching the same exact credit. So you would be surprised, how expensive sometimes these loan estimates are and the service that people get. It might be it's definitely worth getting a second opinion. All right. So then Raul says, thank you for my live streams, answering questions. Wednesdays are my favorite day since discovering your channel. Hey, Raul, thank you. I appreciate you so much. Sometimes I do these and I get off and I'm like, did I make any sense? I felt like that was awful. And Zeke's like, no, you did good. He's like my big pep talker. I want you guys to, Zeke, you should just come over. Everyone thinks I'm talking to my imaginary friend. Come on. They should see your face. So Zeke is like the guy behind all of our live streams. All right. Come on, say hello. Are you saying hello? Are we turning the light off? Because you moved, then light on. So this is Zeke, guys.
Hi.
Yeah, there's a real person that helps me with these. He's super awesome and very supportive. And if you're in Arizona and need a really good guy to run all of your live streams, videos, and etc., he's your dude. Okay. Natasha says, are there any programs that exist for rolling closing costs into your mortgage on a purchase, non-refi? Would this be possible with DPA programs? Absolutely. So down payment assistance is one, and then you can always consider increasing your interest rate to cover with a lender credit for your closing costs. So Sam says, the RE market is about to crash. Any tips on when to find deals when the crash starts? Okay, Sam. Where are you finding this information? I would love to know. I personally disagree with you on whether or not the real estate market is about to crash. But if you were ever going to look for deals, guys, I mean, you could hypothetically keep a track of public records. So any notice of foreclosures, you could look for any delinquent property taxes. I mean, that's always a good way to get a deal in a market. If you're really ambitious, you could do door knocking. And I would contact people who've owned their homes for like 20, 30 years and offer them a fair price for the home in cash, and you'll probably get a deal. I do not believe, though, that the market is crashing. Not my personal opinion, guys. I don't think any of the data supports a dramatic increase in housing inventory. So there is that, my 50 cents on that. This was almost a whole live stream without that question. Oh, Natasha, you are so freaking awesome. Thank you, guys. Thank you so much for tuning into the live. We just got to 7 p.m. Don't forget to like this live stream and maybe subscribe to the channel if you are new here. I really appreciate you guys. And then tune in next week to another live. Appreciate you guys.